I'm Corbett Wall with DV Auction, here with your feeder flash for Monday, November the 28th, brought to you in part by Macrocin by Bimeda. Macrocin is proven efficacy at an affordable upfront price. Without the BS, end of story. For more information, go to macrocin.com. Also, Joplin Regional Stockyards, after that big whiz-bang of a sale they had last Monday, here today on Monday, another big yearling special. 10,000 head on offer and 75 straight pot loads of true yearling cattle. And then as soon as they get recovered from that, of course they'll have the regular cow sale on Wednesday. Then on Thursday they're going to be having one of their wean vac specials, a value-added special. The cattle there will be in larger bunches, more uniform. They'll be calves, but they'll be long time weaned and be through one of their approved pre-vac programs. So they're expecting 6,000 weaned and vaccinated calves for that sale on Thursday. But don't forget the sale here today, Monday, 10,000 head, including 75 loads of yearlings. You can view and bid that sale on dvauction.com. The board can't stop the market. And that's one of my pet peeves. If you've been listening to me for a long time, you kind of have picked up on that, is whenever people mistake the CME cattle futures for the cattle market. And they couldn't be, I guess they could be further from the truth, but they're a long ways from the truth right now. The CME cattle futures is just trading on a contract that 99.9% of the people that are trading them have no intention to keep until it matures. And in fact, you know, if you buy a contract of cattle, live cattle, and let it mature, you can't even demand delivery of those cattle. Now, if you've got one contract shorted on there, you can deliver the cattle. You can deliver upon somebody at your cost. But and if you have a long position, if you're the longest long, you can be delivered upon, but you can't demand delivery. And that's what keeps the board kind of jacked up the way it always is. And it's a broken board sitting right now before the board opens on Monday at a full $3 basis to what we have for a weighted average for last week's fat sales, with a weighted average of 156.08. And your board closed on Friday from December at 153.07. So $3. Your board will be up good, or I would sure think it would be here on Monday. I would expect your feeder cattle board to be sharply higher because your CME cash feeder cattle index has a long ways of catching up to do, because it's always a frustration to your feeder cattle people in Chicago at the CME on Thursday when we don't have many sales, and then we have a Burwell special, we have a Green City, Missouri special, and then you have a few other specials in there, like Bloomfield, Missouri, and you have Winter Livestock and Winter South Dakota, and those cattle, and that's about the only sales you had. So that is going to make your average go up quite a bit when you have that many days without sales, because you have fewer numbers in there, and then you have that big dump of those higher prices, and then the market was so much higher on top of that. So you should see a big jump in your feeder cattle futures here to start the week out. And they don't even know what that's going to be until probably 10:30 or so, whenever they put out your cash CME feeder cattle index, but it's always running behind. Real-time index is up to date, and it's a precursor. It's figured the same way in the same areas, and you can get it always up to date and current if you pay attention on this report and on Cattle Market Central. But your Southern Plains and Northern Plains fat cattle sales last week on direct basis, fully negotiated, $2 to $3 higher fully. And last week, your December live cattle contract ended the week absolutely unchanged, exactly steady from what it was. Did nobody that was trading that notice that the market was that much higher? It happened on Wednesday before Thanksgiving, and things were open on Friday. But it just seems like there's still more demand for short contracts than there are longs. There's more people betting on the market to go down than they are going up. It's really frustrating if you're looking at your board as some kind of an indicator of what your cash market is. I know we're not in, we don't have a November live cattle contract, what we call a bastard month, but December is not very far away. It's here on Thursday, guys, and we're sitting that far away. And a lot of you guys in the Northern Plains, they are always frustrated with the market because it seems to align more with the Southern Plains than it does the Northern Plains, and there's a whole lot more negotiated trade in the Northern Plains, where we have people that actually sell the cattle and they haggle on them, and they're the ones that establish the market. Yet your CME cattle futures are hanging down with the Southern Plains guys, and you've seen a lot of them on social media and things. They call it the Texas Select contract, because that's pretty much what it's indicating. It's not indicating those really high grading cattle that they have up north that sell at a premium. And so, it's kind of a frustrating thing, but everybody, pays attention to your live cattle contracts, because it does have a little bite to it in that, like I said, you can deliver those cattle, and it has to ring true a little bit, but it would be a whole lot better if they would allow long positions to demand delivery. And that might actually get some of your big packers to participate on the long side of the board if they could demand cattle $3 cheaper than they can buy them anywhere on the average. I can't understand why they don't want to do that. But the CME really doesn't like delivery. They just want to have a medium for people to trade, and they want to pick up some commission and expenses on that and make money that way. They don't really want to have to facilitate the deliveries. And so, that kind of keeps them down quite a bit. But it would sure make that board ring a whole lot truer if they would allow those long positions to demand delivery. And then you could get some guys in there speculating in that if you did have that. But evidently nobody's paying attention to good old supply and demand, which is really what makes economics work, right? On the daily livestock report that I quote quite a bit, put out by the CME, I guess they do know what's going on, but maybe the people that are trading aren't paying attention to it. But on the daily livestock report, they noted in there about cattle slaughter. And if you look at cattle slaughter, you'll see that cattle slaughter year to date is up 1.6%. It's quite a bit whenever you're talking, tens of millions of cattle. Hogs is down 2.9% year to date, and sheep is down 9.4%. You wonder why, we don't satisfy the ethnic demand that we have for sheep in this country. But we talked about our cattle slaughter has been heavy and our numbers are light, and it's just exacerbating. It's getting bigger and bigger. And on the daily livestock report, they talked about how the last 3 months that we have information from, August, September, and October, our cattle slaughter was actually 4.1% higher than a year ago during those 3 months. So that's pretty significant. Even if you don't think that the 1.6 year to date is significant, you would sure think that 4.1% over the last 3 years is significantly higher. And your female slaughter, heifers and cows, yes, we're including the dairy cows, but actually dairy cow slaughter has been down some. So it's mostly beef cows that's been making the difference. But your female slaughter, heifers and cows, has accounted for 82% of that increase, of that 4.1% increase. That is huge, especially when we're on tight numbers. We know that we've had these big droughts that's pulled back on the numbers of cattle that we had and the number of cows that people's been able to run. Of course, they knew the market was coming. They would have liked to kept them, but We have just culled so hard. But your females have averaged 50% of the total cattle slaughter over the last year. That's significant. I've been telling you here the last several months pretty regular that we killed more does than we did bucks. Again, you know, when I'm talking about your weekly slaughter, we have done that so many times over the last year, and they kind of smooth that out. They average that out in an annual ratio. That the ratio of females slaughtered to total cattle slaughtered has hit 50%. Okay, that's very significant. And the last time that has hit, that ratio hit 50% in a 12-month period averaged, was in the mid-1970s, guys. It normally runs in that 44, 45, 43%, because, you know, typically people raise male cattle and steer them and then feed the steers out. But whenever we've been having so much heifer slaughter and so much cow slaughter, well, that just tells you how light we're going to be on numbers going for at least the next 3 years. And like I've said several times lately, probably 4 years we're going to be that light, because people's got to keep heifers back to make more cows, and that's going to make the number of cattle that we have to feed lighter. It's going to make our markets higher. If you've got cows and you can keep them, keep a hold of them, guys. You know, I know a lot of people have been getting out, and you know, it's not a popular thing right now. People would rather drive you know, $1 million tractors than they would pull calves in the mud. I understand that, but it's a good way of life, and it's going to be a pretty good living, especially for the next 3 to 4 years, if you can kind of keep a hold down on your input costs, which I understand is overwhelming. But I think we're going to get a chance to make some money over the next 3 to 4 years, people. Look at your board for last week. December live cattle futures for Monday was up 47, Tuesday was up a quarter, Wednesday down 45, Thursday was Thanksgiving, and Friday down 27. And your December live cattle futures ended the week at 153.07, which is exactly the same way that they started the week, and we gained all this ground on your fat market. Unbelievable. February contracts ended the week at 155.12, down 73 cents. Feeder cattle for January, Monday they were up 185, Tuesday down 95, Wednesday down 242, Thursday was Thanksgiving, Friday down 95 cents, and your January feeder cattle contracts ended the week at 178.30, down 247 for the week. And I'm going to give you some of the highest individual quotes that we've seen for a good 7-8 years. It's unbelievable. March feeder cattle 181.55, down $1.57. Chicago Board of Trade corn for December ended the week at $6.68 a bushel. Beans for January ended the week at $14.36 1/4. Fat cattle trade up through Thursday, which didn't have any trade on Thursday, but we did have a lot of Wednesday trade and a lot of late Wednesday trade, and we got all that picked up. 80,000 head pure negotiated in your 5-area feeding region. Not too bad. Your live sales of steers and heifers last week ranged from 153 to 158.50. Your packers got very aggressive. On Wednesday morning, like at 8 o'clock in the morning, they started bidding steady 152 in the Southern Plains. Nobody wanted to take it. They didn't even stop at 153, jumped up and got some cattle bought at 154, wanted more cattle and had to give 155 to get it in the Southern Plains. Northern Plains was similar, but the market in the Northern Plains really grew on the top side of the price range, with several guys that I know getting 158.50 live for fats in the Northern Plains on Wednesday. But your weighted average on live steers up through Thursday last week was 156.08. That's $3.19 higher than last week's weighted average, or the previous week's weighted average. Dress sales 242 to 247. That's $3 to $6 higher. Your weighted average on dress steers 244.88, up 309 compared to the previous week's weighted average. Did have a little bit of trade on Friday. Iowa had confirmed sales of 200 up through 2 o'clock. 27,000 for the week in Iowa, which is back typical for them. They've been running really light. About the only sales we really saw was 244 dressed, and that was pretty much the market. Did have a few quoted string of cattle bring 159 delivered. Now we base our markets off the FOB live price, but 159 delivered would be pretty impressive. Nebraska had 100 head confirmed sold on Friday, 29,800 head for the week, which is good for them. 244 dressed was the only market that we had on Friday. Kansas, 300 head confirmed on Friday, 14,300 head for the week. That's typical for Kansas. They're usually in those low teens right in there, but we haven't seen that for quite some time. But had one deal of cattle bring 152, and I'm not sure why somebody would take 152. They had them in the next to the highest in grading column, and a typical weight. I'm not sure if they were asleep on Wednesday or what happened there, but it was some kind of a deal. But that's not the market. Your market was 154 to 155 in the Southern Plains. Did have some dress trade on Friday in Kansas at 244. Texas didn't sell a hoof on Friday, and they sold 9,500 head for the week, which is typical for them. So typical trade, I'm going back historically over the last several years, and that's about 80,000. We'll get a few more, won't get to 100,000. So in there somewhere around 85,000, which is not as much as we'd like, but it's a pretty brisk movement. Box beef cutout values, choice cuts last week. Your weighted average for all of last week's sales, 254.15. That was down 293. And your late week quote on choice product was another 250 lower than that at 251.83. Your select weighted average for all of last week was 233.78, up 160. So narrowed that spread between choice and select a little bit more, and they have really closed that just in the last week or two. We were running over $30, and now we're just running $20. But your late week select quotes were a little bit better than what I give you for your weighted average of all of last week, or about 50 cents higher than that at about 234.37. And like I said, $20.37 choice select spread, lighter movement of 485 loads of cuts, grinds, and trimmings. Your slaughter, pretty good slaughter for a Thanksgiving week, and they're expecting a huge slaughter this week and probably next week leading up to the holidays. 581,000 for last week, including the Thursday holiday. You can't really compare it to the big 674,000 we had the previous week, but compared to the Thanksgiving week last year, we were 13,000 more this year, so still running pretty brisk. Let's talk about your feeder cattle market. Your real-time index on DV auction ended the week at 176.62. That was up $2.22 for the week. And like I said, your CME is dragging over $3 behind your real-time index because it's not up to date. It's still stuck in last week's quote somewhere in the middle of the week. But they're going to have to put Burwell in there. They're going to have to put Green City in there and their yearling special on Tuesday. When they get those in there, that thing is going to jump a bunch, get similar right up there close tight with what your real-time index is, and that should give your nearby feeder cattle contracts a boost there. But I saw something I wanted to share with you. My friend Greg Harrison from Perry, Missouri, I worked with him for many years, and he still reports markets when he's not running cattle for the Missouri Department of Agriculture, and he was at the sale in Bowling Green, Missouri. That's Eastern Missouri Livestock Commission. Really good sale there right on the Illinois border. They had their Thanksgiving bred cow special, and man, was it something to talk about. I mean, they had a lot of diversified producers in there that had made a lot of money on their grain, enjoying the market on this grain, and they were ready to spend some money rather than have to pay it in taxes. But they got aggressive on the bred heifers that they had on hand there, and they had some nice ones. They've got really good cattle in that part of the country there in eastern Missouri, northeastern Missouri, really. It'd be north of St. Louis. But on the best fancy bred heifers that they had 150 head altogether, several different really nice reputation consignments. They were big heifers, is what people want in that part of the country because they're corn's free. 1,200 to 1,375 pound bred heifers. Those bred heifers in their second, mostly in early third stages, bringing from 2,400 to 2,750 per head. Wow! In Bowling Green, Missouri, Eastern Missouri Livestock Commission. Good friends there. Let's talk about your markets for last week. Your trends, it was really impossible to give a trend because most of our big sales didn't really have a sale. Of course, they had a big sale at Joplin last Monday. Oklahoma City had a good sale, but they weren't, they were higher, but they weren't crazy like what we saw at the end of the week at some of those premier, kind of a special sales that they had, in the Midwest later in the week. It was higher last week. We can't pinpoint how much higher it was, but the markets are going to be higher here on Monday in your big high volume Monday feeder cattle auctions. Oklahoma City will be higher. Joplin should be higher, but it'll have a tough go of it being higher than the big yearling special they had last week, but I assume it will be higher. Let's talk about some individual quotes that I saw late last week and over the weekend. How about winter livestock auction in Winter, South Dakota? That is special there. 51 steers weighed 631 at $2.18 a pound. How about Erickson Livestock Market in Erickson, Nebraska? We never talk about them. Don't get their information on Cattle Market Central, but I wished we did. 82 steers in Erickson, Nebraska weigh 659 and bring $2.10 a pound. Very impressive quote there. How about your Zoetis stick out sale of the day? It was Burwell Livestock Market. They had a yearling special last Tuesday before Thanksgiving at Green City, Missouri, and it was impressive. They had a calf sale special in Green City on Friday. It was pretty good, but sometimes Burwell just blows the roof off the place. It's kind of like Bassett. They're a lot the same. They're in the same part of the country, both on the Yellow Brick Road. But Burwell Livestock Market had one of those barn burners on Friday, and it was very impressive. You look at this automated market report through Cattle Market Central, see they had near 6,000 head on offer there, feeder cattle. 729 head of 5-weight steers, average 556 with a weighted average price of $213.93. 1,616 head of 6-weight steers, average 650 with a weighted average price of $204.56. 664 head of 7-weight steers, average 745 with a weighted average price of $199.21. It's not on this automated market report, but I did see on there that they had one lot of 344 steers that weighed 1053 that bring $181.75. My goodness. How about 591 head of 5-weight heifers, average 543 with a weighted average price of $192.62. But also, your most impressive quote that I saw late last week or over the weekend come out of Burwell Livestock Market was your Macrocin No BS top quote for the day. This is true. It happened. It was on NHTC, non-hormone treated cattle, which, that is a premium, but it's not that big a deal. But there were 75 steers, weighed 750 pounds, bring $224.50. And that's your feeder flash for Monday.